relation to the budget announcements that were made and arguably things that weren't changed as well, just as a bit of refresh as to where we are now and the corporate tax regime. There were no announcements on the corporation tax main rate, 25% and 19% for smaller companies. Um, there's full expensing still continues to apply for plant and machinery. One of the changes that was announced, however, was a new 40% first year allowance. Again, this is only really likely to apply for certain types of businesses. So, like leasing businesses who previously couldn't get um, AIA or full expensing will get this 40% first year allowances, as well as unincorporated businesses. Because unincorporated businesses also don't get full expensing, but they do get annual investment allowance. As with a few things in this budget, one of the trade-offs for having this new 40% relief was then also a cut in one of the existing reliefs, which is this writing down allowance. So if you have any balances in your capital allowances pool, instead of being able to write down at 18%, it's now going to be at 14% going forward. So it will take longer to receive the relief. There was a small, well, relatively small change on the administration side. Corporation tax late filing penalties effectively being doubled. It's been a long time in coming, I would say. Hasn't changed, I think, since I've been in tax, which is 20 plus years. So um, not surprising that they've looked at this part of legislation, decided to double those costs. On the growth side, so one of the themes that the Chancellor was keen to get across was um, a budget for growth. And in that respect, she announced changes to EIS to make it available to a larger pool of companies. So now the limits on the size of the businesses effectively are greater, so more companies should be able to claim. There wasn't any change in the type of companies in terms of the trading aspects, trading activities of the companies that apply, but the size of the businesses you can there's going to be a wider pool now that can make a claim for EIS relief. And I suppose allied to that, EMI, enterprise management incentive schemes. These are a great way of incentivizing staff members by giving them a promise for a stake in the business. It's a share option scheme. Um, they're very valuable, and the government has recognised that, and again has expanded the pool of companies that can now apply for this. So it used to be 250 employees; it was the maximum level of employees you could have and still qualify for the scheme. Now it's up to 500, and also the gross assets have actually been quadrupled. So it will bring far more companies into this being able to qualify for these. Hi. Um, so I was the EMI scheme. It's an alternative way of incentivizing staff members rather than just giving them a bonus that would go through the payroll, income tax, and national insurance. Instead of that, you can give them a promise for a stake in the company, such that effectively it will, if it works correctly and has been designed and implemented correctly, will give the individual a capital gains tax effectively exit when the company is sold. So they're a really great avenue, really great vehicle to pass value on to staff members. Other areas that were mentioned, the pay per mile, I guess, tax on electric vehicles and plug-in hybrid vehicles. Um, yeah, as was mentioned by Adam earlier when he was talking about the mansion tax, question marks as to how exactly they'll police the amounts, the mileage being travelled in these vehicles. They've given themselves a couple of years of lead time to figure out how this is exactly going to work. But essentially, it will be an additional cost to businesses that have these vehicles in them. Employer NI, no changes here. Again, theme the budget, frozen allowances, frozen thresholds. So we're back at, still at the 15% rate that businesses have been getting used to for coming up to 9-10 months now. Again, for your typical smaller business, perhaps won't see much of a difference to your bill. There were announcements on the small business rates relief scheme. Again, trying to encourage businesses to invest in their premises. So again, if you've got it's an appropriate time you're trying to grow your business, then there's some support from the government there in the form of reduced rates. One of the headline announcements I think the Chancellor made was about listings. So there's going to, she wanted to encourage companies to list in the UK. So there's going to be a 3-year exemption from stamp duty for companies floating on the stock market here. There's also reference to investment in emerging sectors. So this is, there was a lot of talk in the budget about government spending on infrastructure. So again, this is a line here about investments that are going to be made. And again, if companies are involved in some of these projects in some of these regions, then they can get access to greater reliefs. There's gambling duty. Again, basically here I think is an attempt to align online gambling with online gaming and gambling with the high street shops. So trying to narrow those gaps. On the international side, so there's transfer pricing. So if you've got in a group 2 UK companies and they've got transactions between them, under the old rules, technically you'd have to have a look and make sure that the transaction between them are commercial. Effectively, what's been announced now is that unless there's some tax at stake, if it's a UK to UK company, you won't have to worry about that. And also there was an announcement that medium enterprises will stay within the SME exemption on transfer pricing. So that's when you've got a UK business dealing with a non-UK entity in the group. Further, there's in line with the transfer pricing point, this international control transaction schedule, another theme here. This is basically a new filing that businesses will have to do if effectively they're doing cross-border transactions. Again, it's, I think, so that HMRC can do some data collection as much as anything else. And one other point to mention as well, again, allied to what Adam was talking about earlier, with the dividend tax rate going up to 35% for the high rate tax, that is also then going up for the Section 455 tax. So that's the director's loan borrowings from your closed company. That will go up to ally with the same rate. That's just a function of the legislation. It always aligns to the high rate of tax on dividends. I can now hand over to Matt, who can do the financial services part of the presentation.